Coinbase withdraws support for the Clarity Act. XRP holds steady around $2.10. The CME Group is set to launch Cardano, Chainlink, and Stellar futures. And the SEC is under fire from Congress over crypto enforcement. This is Ledger Prime. Let's dig in. Our top story today, a massive blow to crypto legislation in DC. Coinbase CEO Brian Armstrong has officially withdrawn support for the Senate's latest crypto market structure bill. Armstrong didn't hold back either. He called this thing a bad bill that would effectively kill decentralized finance and ban tokenized equities in the United States. This is a complete 180 from last month's optimism. Without the industry's biggest player on board, the Senate Banking Committee has slammed the brakes, officially postponing their markup of the bill. It looks like the fight for a fair regulatory framework is heading back to square one. And while the lawyers are fighting in DC, the markets are moving on. Specifically one asset that seems to be in its own universe right now, because XRP soared past the $2 barrier and is now sitting comfortably at around $2.07, turning the massive $2 psychological resistance into a solid floor of support. So what's driving this? Two things. First, a massive short squeeze. Short interest in the NASDAQ-listed XRP ETF has plummeted 47% this month alone. And second, Ripple just dropped a $150 million partnership with LMAX Group. They aren't just talking about adoption, they're integrating the RLUSD stablecoin directly into institutional trading rails. The institutions aren't just coming, they're already here, and they're using XRP. And it's not just XRP getting the institutional treatment. The CME, the Chicago Mercantile Exchange, is about to open the floodgates for the rest of the market. So big moves for Cardano, Chainlink, and Stellar holders, because the CME Group, the world's largest derivative marketplace, announced that it is launching ADA, Link, and XLM futures on February 9th, 2026. This is a game changer for mid-cap altcoins. For the first time, big hedge funds will have regulated, safe tools to hedge and bet on these assets without having to touch an exchange. So we're moving past the Bitcoin-only era of institutional finance. And if you've been waiting for alt season to get professional validation, this CME announcement is essentially the starting gun. But while the CME is expanding, the SEC is apparently pulling back, and not everyone in Congress is happy about it. Because the SEC is in the hot seat again, but for a reason you might not expect. House Democrats, led by Maxine Waters, sent a blistering letter to SEC Chair Paul Atkins today. They're demanding to know why the agency has suddenly dismissed over a dozen enforcement actions against giants like Binance and Coinbase. Waters is calling it a dramatic retrenchment that undermines investor confidence. It's a wild shift from the Gary Gensler era. The SEC is now being accused of being too soft on crypto. Whether it's a political pivot or a strategic white flag, the regulatory war has entered a bizarre new chapter. So guys, from legislative collapses to XRP's $2 moon mission, today proves 2026 is the year of institutional reality. We're seeing a shift from crypto versus the world to crypto as the new infrastructure. I'm watching that $2 XRP support level closely tonight though, so stay tuned for the next update, and I'll see you in the next one.